When it comes to investing, one of the most frequently asked questions is how much do I need to have invested so that I can be financially free, quit my job, and retire? Now, in this video, I want to explain why that is not only the wrong question to ask, but also how you need to think about it instead. So let's get straight into it. Now, I'm going to make this as clear as possible by using an example so that you have a very clear image in your mind of how you need to think about this and the steps you need to take in order to get to where you want. So, the example I'm going to start off with is an investment of £200,000 in gold. And I will explain why I'm using gold in just a bit later on. So, let's say you've got £200,000 invested in gold. And let's say you're investing using a gold ETF through a tax-free account. So let's say you've got 2,000 shares of gold, 2,000 shares of gold at £100 per share. So, why is this important to know? Well, let's imagine that you have £20,000 saved up for the next 12 months. That is going to cover everything, your living costs, all of your expenses, your holidays, whatever it may be. You have 20 grand in your current and your savings accounts to see you through the next 12 months. So, we have £20,000 that we can use for the next 12 months. But at the end of that 12 months, you've used up your £20,000 and that ends up being zero. Now, what do you hope? You would hope that the value of your investment in gold goes up over the next 12 months. Ideally more than the £20,000 that you spent. So let's say that the value of your investment went up 10% over the next 12 months. Well, now your investment would be worth £220,000. So you can sell some of that. Let's say you sell £20,000 out of that, and you put it in your savings or your current account. That's 20 grand. So that will allow you to replenish your 20 grand that you spent over the previous 12 months. And now you've got 20 grand again to spend over the next 12 months. But there's something that I haven't shown you here, which is that, yeah, you're selling £20,000 out of the value of your 220 grand investment. But do you know what that means? That means, so let's just say you've sold 10%. I know it's a little bit less. Let's say 10%. That means instead of the 2,000 shares that you had initially, you now have 1,800 shares instead. So, in fact, the quantity, the volume of your investment has actually decreased so that you can fund your day-to-day life. So what do you think will happen over time? Well, over the course of the next few years, you're going to be selling more and more shares to fund your life. And eventually you will end up with 0 shares, 0 investment, and 0 money at all. Now, it gets worse. Let's say, for example, that the value of your investment didn't go up 10%, but in fact went down instead. Let's say it went down to £180,000. Let's say the economy had a bad year and there was a correction in the markets just as you went to pull out that money. Well, now what do you do? Because now, how do you replenish the £20,000 that you had spent? Your current account and savings are at 0. You need to find a way to replenish this. But how do you do it? Well, you have one choice, right? Which is to sell £20,000 out of this £180,000, which in fact is now more than 10%. So now you're left with 160 grand worth of investments So yes, you can top up your accounts so that you're back at 20 grand for the following year, but you have had to sell more than 10% of your investment to get that, which means you will have less than 1,800 shares. In fact, it's going to be probably more like 1,700 shares. So 1,700 shares of gold instead of the 2,000 that you initially invested. So now you've got even less of your investment than you did before. But it gets even worse because now that 160 grand needs to go up by £40,000, which is near enough, which is over 30%, just to get back to the £200,000 initial investment you had made. So that is not reliable. You're hoping that your investments will provide you with enough growth to fund your lifestyle, but there is no real plan, or there is no real way of ensuring that the money you make from your investments can cover your lifestyle. So that is why when people ask, or if you ask, how much do you need to invest so that you can retire? Well, that question can't be asked, or answered rather, so easily. So here's how you need to think of it. Let me clear this board. There is one term that you need to think about, and that term is going to be called cash flow. So when it comes to cash flow, what do I mean? Well, let's start off with £200,000. £200,000, but this time into a property. So one property worth £200,000. That property provides you with a yield of 10%. Again, I'm just being hypothetical here. So what is 10% of £200,000? That is 20 grand a year. So after you've paid the mortgage and any maintenance fees and so on, what you're left with after the rent has been paid is 20 grand in profits. That is a yield of 10%. Now, once again, you have 20 grand to start with in your accounts. Over the course of the year, that 20 grand becomes zero. Well, guess what? Because of the rental income that you've got from the property, you can take that 20 grand and restore your accounts. So that's another 20 grand you have, which you can spend over the course of the next 12 months to fund your lifestyle. And here's a key. You didn't have to sell any shares in your property to do so. You still have that £200,000 property. Whether it's gone up in value or even gone down in value, you still have 100% of that property. You haven't had to sell any of it or any portion of it. And that is key. Now, let's say you don't have the money to invest in property, or there are other income producing assets. You can buy shares in companies that give you a cash flow by dividends. Now, that is a topic for another video, but that is simply another way it can be done. But of course, you still need a lot of money because dividends are normally no more than a few percent. So when it comes to thinking about how much you need to have invested to live your life, you need to think about how much your life actually costs. How much do you need each year to sustain your standard of living? Are you willing to decrease your standard of living for more freedom? Or do you need to have a certain amount invested that will provide you with enough cash flow in order to let you live your life? So at the end of the day, it's not just about how much you have invested, it's the cash flow from those investments that will allow you to quit your job and live your life. That is a way in which you need to think about it. Thank you for watching. I'll see you on the next one.